Welcome to TalkTickers. So Analog Devices just dropped their latest earnings. And wow, it is a complicated story. Today we're going to cut through all that noise and find the real signal.
Okay, so let's set the stage here. Remember last quarter? It was this weird paradox. ADI posted great numbers, but the stock got hammered. Why? Well, the market was spooked about its auto business. So the big question now is, with these brand new Q3 results, did those fears actually come true? Or is something else entirely going on? Let's dig in.
All right, let's jump right in. We're calling this first section the beat and the drop. Kind of sums it up, right? After that whole paradox last quarter, you got to wonder, did history just repeat itself?
So, first things first, the headline numbers for Q3, they were absolutely rock solid. I mean, look at this. We're talking $2.88 billion in revenue and adjusted earnings of $2.05 per share. Both of those numbers sailed right past the high end of what management themselves told us to expect. That's not just a beat, that's a powerful beat on both the top and bottom lines.
And you know, this wasn't just one lucky segment carrying the team. Nope. The CEO, Vince Roach, made it super clear. That quote says it all. Powerful, widespread growth across the entire business. So let's break that down a little more, because when you look under the hood, the numbers show this really impressive strength in, well, pretty much every single part of the business. Check this out. Every single segment posted double-digit growth year over year. Industrial, which is their biggest business, was up 23%. Even automotive, the one everyone was worried about last quarter, up a solid 22%. And then you have communications just leading the charge with a massive 40% jump. What's driving that? You guessed it, AI demand.
Okay, so if all the numbers were so great, what's the problem? Where's all this concern coming from? Well, it all circles back to that automotive segment and let's call it a tricky little detail that has investors watching very closely.
So the key thing to understand here is a concept called order pull-ins. It sounds technical, but it's pretty simple. Basically, you've got customers who are worried about things like future price hikes or tariffs. So what do? They buy their stuff ahead of schedule. They accelerate their orders, which pulls demand from the future into right now.
And that's exactly what happened in Q3. These pull-ins, specifically from China, really help boost the auto numbers. But here's the catch. Management is basically telling us that's going to reverse in Q4. I mean, it has to, right? All that pre-buying has to unwind. And because of that, they're expecting a sequential decline.
And you got to give them credit. Management is being super upfront about this. The CFO, Rich Paccio, is not hiding it. They're signaling very clearly that they're managing expectations for this short-term headache in the auto business.
Okay, but here's the thing. If you only focus on these auto pull-ins, you are completely missing the forest for the trees. The real growth engine here, the true signal in all this noise, is ADI's industrial business. And folks, it's a monster.
I mean, just look at the mix. Industrial is ADI's biggest segment by a country mile. It's 45% of their total revenue. We're talking nearly half the entire company. So, what happens here? It really, really matters.
So while everyone's distracted by this temporary dip in auto, the much, much larger industrial business isn't just growing, it's accelerating. Think about this. It grew 7% sequentially last quarter. Then it grew 12% this quarter. And now? Management is guiding for low to mid-teens growth again in Q4. And Q4 is normally a seasonally down quarter for them. That is just a massive sign of incredible underlying strength.
So what's fueling all this? We're talking about huge, long-lasting trends, things like AI infrastructure, a record quarter in aerospace and defense, and the absolute explosion in industrial automation and robotics. This is the whole package that management calls the AI-driven intelligent edge.
And the future opportunity here, it's just staggering. The CEO laid it out perfectly. The move from the kinds of mobile robots we have today to next-gen humanoid robots, well, that's a game-changing catalyst for their business. His quote really says it all.
And let's put a number on that, because it's a big one. We're talking about a potential 10 times increase in revenue for every single one of these advanced robots they sell. This isn't just a little step up, it's a massive leap. It's exponential.
So, that brings us to our final section, the next call. We've weighed all this, the short-term noise in auto, against that really powerful, accelerating signal in industrial. So here's our take on what happens next.
So here's our prediction. We think ADI is going to meet or even beat their Q4 guidance, and it's all going to be driven by that industrial powerhouse. And as they put another strong quarter on the board, we expect the whole market narrative to finally shift. People will stop obsessing over the short-term auto story and start focusing on the overwhelming strength in their core business.
For all those reasons, our rating on ADI is a confident outperform. Here's why. We think the market is just completely fixated on a short-term, well-communicated issue in a segment that isn't even their biggest. And while they're doing that, they're basically ignoring this powerful, accelerating, long-term growth story that's already happening in the part of the business that matters the most. It feels like a huge disconnect.
So at the end of the day, it really just comes down to this one question. Is the market staring at the rearview mirror, focused on a temporary headwind, while ADI is out there building the highway of the future? To us, the signal is crystal clear.
And just a reminder, as always, this is not financial advice.